So we're going to ask everyone, inshallah, to mute their mics, and inshallah, you can unmute when you have questions. Bismillah ar-Rahman ar-Rahim. Wa sallallahu ala Muhammad wa ala alihi wa sahbihi ajma'in. Inna alhamdulillah nahmaduhu wa nasta'dihi wa nastaghfiruh. Wa na'udhu billahi min shururi anfusina wa sayyiati a'malina. Man yahdihillahu fala mudilla lahu wa man yudlil fala hadiya lahu. Wa ashhadu an la ilaha illallah wahdahu la sharika lahu. Wa ashhadu anna Muhammadan abduhu wa rasuluh. So inshallah, we're going to try to have this session is going to be about 25 to 35 minutes, inshallah, of presentation that Brother Abdullah will present, inshallah. And what we like to do is ask everybody, first of all, to mute their mics. And two, if you have any questions, just hold your question until the end of the session. Just allow to go through the presentation. Maybe that will answer some of your questions. Then inshallah, you can ask the questions afterward. You can send them via chat if you're comfortable with that, or you can ask your question, inshallah, immediately after the session is over. This is going to be talking about the current financial system or the financial system that we have today, and the Bitcoin as well. And subhanAllah, as we all know, that everything that we deal with financially at this point in time that has to do with the banking system introduces some kind of a level of usury or riba within it, whether your money is in a saving account or checking account or any kind of accounts that they're available. There's some kind of a riba that the bank or that bank institute will use the money to do some investments which they'll gain interest on. And so we're trying to find out if there's any alternatives for us that we can invest in and what those alternatives will be, inshallah. And so Brother Abdullah is going to be talking about around that subject, talking about the financial system, what are the mechanism, how it's working, and what alternatives that we have, if any, that will be user-free or riba-free that Muslims can, inshallah, be able to use and utilize and invest in. Brother Abdullah, his name is Abdullah Oda Dakhlallah. He is the co-founder of the Bitcoin Majlis. It's a non-profit organization that promotes the understanding and adoption of Bitcoin among Muslims and Muslim organization. He has a PhD in his biological engineering. He's married with children. He's local to the state of Washington. He is passionate about the Bitcoin and enjoys helping Muslims, to understand the Bitcoin and the cryptocurrency. And so with that, inshallah, I'm going to turn it to Brother Abdullah to go through his presentation, inshallah. And again, please, if you have any questions, jot them down, write them via the chat, or ask a question, inshallah, at the end of the session, inshallah. Jazakumullah khair. Brother Abdullah, please.
Yeah. Bismillah ar-Rahman ar-Rahim. Thank you so much for giving me the opportunity to speak about this. This is, I think, one of those issues that I feel very passionate about, and I feel like the story about it doesn't really get told, especially in the correct way. Now, but before I get started, I do put Bitcoin there on the title, but as you will see, 80% of this presentation isn't even going to be about Bitcoin because there's so much we have to unpack, first of all. And also, before we start, I do want to mention, obviously, like, I am not a Muslim scholar. Actually, I'm not even a Muslim student. Like, I am not even knowledgeable in fiqh or aqidah or anything like that. So I don't want to give the impression that this is going to be a presentation where I will unequivocally say that Bitcoin is halal and give you all the reasons why it's halal. But what I will do, inshallah, is I'm going to give you the story of like what the problem is, and then what Bitcoin is seeking to solve, especially from a Muslim perspective. So we'll go ahead and get started. So, okay. So, we have to start way at the beginning, and I apologize because, when I'm trying to explain this thing, a lot of people just want to dive headfirst into understanding what the blockchain is and all of this other stuff, but we got to take a step back and we have to answer the most fundamental and most important question. I think it's probably one of the most important questions of our time, and it's a very simple question. It's, what is money? Now, if you ask someone what is money, I mean, this question has been studied extensively in books and essays and videos and podcasts, all kinds of media. They've been trying, people have been trying to figure out what this money is. So, there's many different definitions, but I like to understand what money is based off of its function. So historically and, generically, money serves three common use cases. The first one and most important one is medium of exchange. So it's just, you have something and then you give it away in exchange for something else. You use that serves that one function as medium of exchange. There's also a store of value. So whenever you hold on to money, you expect it to at least hold some kind of value going into the future. Otherwise, there would be no reason to hold on to money. And it also serves as a unit of account. And this one doesn't really get doesn't really get understood within the context of what it means for it to be a medium of exchange and store of value. But in general, money serves these three functions more or less: medium of exchange, store of value, unit of account. That's a very, very good starting point to understand just what money is in general. So a next question that we should answer is, what does money solve? And again, this is a really complicated question, actually, because many people have different competing theories. And especially when you look at the history of money, which we'll get into in a second, people even have different competing theories about like how money even emerged. I mean, if you try to imagine how money first started, it definitely brings up a lot of questions that bring up a lot of other questions that need to be answered. So what I like to do is, I put the title of this slide as money as a protocol. What do I mean by a protocol? A protocol is just a set of rules. We'll go into that deeper later, but like a protocol can just be anything. It just means like a set of rules. So like, you're playing a game of chess, you follow a protocol. You're playing a game of soccer, you follow a protocol. You log on onto the internet, you follow a protocol. You send an email, you follow a protocol. And I like to think of money in that same kind of way. So one example I like to give to people to kind of answer the question of what money solves. So, as Brother Khalid mentioned, I'm a father of 5 children. I'm a very busy and very tired dad. And sometimes, I don't have enough time to go to Costco or Walmart and go get my groceries. So sometimes I'll actually order my groceries through an app on my phone. And if you just think about like all of the stuff and all of the things that require prices, just in the simple act of me getting on my phone and ordering groceries, I mean, it's just prices are in everything. And a lot of people will like complain about that and complain about, oh, capitalism is so evil because everything has a price. But if you like take a second to think about it, it's really good that things have prices because it helps us coordinate economically. So, like in the example that I give where I have to order groceries on my phone. I pull up my phone again, but the phone is a really complicated piece of machinery that requires lots and lots of inputs and prices. And I connect to the internet. I log into my app. The app has a lot of people working on it and has a lot of software that's being written for it. And I go through the app and I select all the different groceries. Every time, like I select something, whether it's like vegetables, meat, fruit, or whatever, like it's all of those things require prices. Everything to stock all the shelves at the supermarket with all of these things, all of it require some kind of economic coordination. All of those things have prices. And then this app is going to pair me up with someone who's going to go pick up the groceries. Again, he gets into his car, which also had a lot of prices go into it. He gets in his car, he goes on the road, and then he goes into the supermarket, and then he gets all of this stuff. All of these things require prices, and then he delivers it to my doorstep. So just in this simple example, what I'm trying to show you is that money is involved in like every piece, every step, everything that we do in our lives has a price. You can look anywhere around you. Everything had a price when you first got it to when it first, got when it first originated. It all required prices. So I like to think of money as a protocol that facilitates economic coordination, which helps the development and advancement of civilization. I believe that there is no way we could have any kind of thing that would be called civilization without money. We need money if we're going to have any kind of civilized society. It allows us to coordinate economically. It allows us to bring goods on the market and people can buy those goods on the market. And money kind of facilitates that. So that's I want you to think of money as that way, like as just a protocol that helps advance the process or advance civilization. So where did money start? This is again a very complicated question, but if you look at history and the history of money, it's a protocol that's been discovered many times across thousands of civilizations. And examples that people have used as money is like cattle. So, people back then understood that cattle is very valuable and that if you had cattle, you can trade it for a lot of things. People ended up using seashells because they were a little bit rare in certain areas. You can also use salt. Salt was used by everybody. So like, you can trade it for something and it's extremely divisible and it's really nice to be used as money. We also had beads that were used as money, especially in places in Africa. You had like specialty made beads that would, signify some kind of value associated with them. And you also have rye stones. So rye stones is a really interesting use case for money. So you see those rocks over there. I have a picture there. So there's a island off the coast of Indonesia, and in this small tribe, they use these things called rye stones. And basically, it was just a kind of a money that they use. But what's really interesting is a lot of these rye stones were huge. Like it would take lots and lots of people to actually be able to move these rye stones. So whenever there would be a big exchange, say if someone was getting married and they needed to pay a dowry, what would happen actually in the village is that everyone would gather around in the village. The chief would announce, "All right, this big rye stone is going to is going to be transferred from this individual to that individual," and everyone like in the village acknowledges it, and then they all go on about their day. Like if you think about that, that's crazy because the stone itself doesn't move, but everyone in the village acknowledges that, like, hey, this stone now belongs from one person and it goes to another person, and everyone kind of acknowledges that. We'll touch back on this subject later when we talk about Bitcoin because it's really relevant. But I mention it because in different cultures and different societies, they use different things as money. But eventually, humanity kind of converged on precious metals, specifically gold and silver. Now, even as Muslims, this is extremely relevant because this is the currency that Prophet Muhammad sallallahu alaihi wasallam, and not just Prophet Muhammad sallallahu alaihi wasallam, but also the prophets before him also use gold and silver as well. So gold and silver have been around for thousands and thousands of years, and humanity converged on gold and silver as their money. And it's for a very good reason. Why did they converge on gold and silver as money? Let's answer that. All right. So answering the question that I posed earlier about what does money solve, it helps really to go back to the history and look at money and understand that money is discovered to solve the universal problem of the double coincidence of wants. Now, what the heck does that mean? So if someone has, like, say, someone is raising chickens and they want to sell one of their chickens in exchange for the farmer that has milk. But the farmer that has milk, he actually doesn't want chickens. He doesn't like chickens. What he wants is like a new pair of shoes. So if you're the chicken farmer, you need to go find a tailor who can make a pair of shoes, and you get the pair of shoes, and then you bring it to the farmer who has the milk, and then you can get your milk. So that problem, you can understand that, like, if you have a small, even just a small village with many people having different kinds of wants, this gets extremely complicated and extremely inefficient. So before money was discovered, there was barter. But again, it was really inefficient because you had to find someone that needed the exact commodity that you needed. You also needed the right amount of that commodity. So, like, for example, like if you wanted shoes, you can't really divide shoes into smaller pieces. Like shoes are not a very good form of money because it's either you have the pair of shoes or you don't. And you also have the issue of like the issue of divisibility, and also it's really just difficult to ascertain relative value. Like you have to price eggs in terms of milk, but then you have to price milk in terms of the shoes, and then you have to price the shoes in terms of the eggs, and it gets really complicated. So even if you just have like a dozen commodities that a small village is trading, you get a lot of different prices. It's really inefficient to do barter. But eventually, what people did is that they found that, like, oh, wait, certain things actually kept their value better than other commodities. And certain commodities were valued more widely compared to other commodities. And people discovered that, wait, actually, what people really want is this precious metal, this gold. So humanity eventually converged on gold. And I want people to understand that, like, humanity converged on gold spontaneously. Like it did, one competing theory of money that a lot of some academics like to say is that money was invented by like some temple or something that was keeping track of everyone's debts. I kind of reject that theory because it doesn't really make sense, because you can't have a single person that's, or a single group of people that's managing everyone's prices and trying to keep track of everyone's relative prices. What makes more sense is that people discovered that barter was not a good way to exchange value, and eventually people kept through an iterative process that was pretty quick, eventually converged on gold because of its monetary properties. So, what monetary properties are these? Let's go over that. So gold is chosen because it has certain monetary properties that are very desirable. It's divisible, right? Like you can divide gold into smaller amounts. It's durable. Gold is very durable because it can last thousands of years. It's a very durable money. It's also fungible. Fungible is a monetary property we don't talk a lot about, but fungible just basically means that each unit of the money is identical to every other unit. So like an example would be like, if I had a if I had a big bag of rice and you were buying a cup of rice from me, and I go and I give you a cup of rice, and then you say, no, I don't want that cup of rice. I want another that cup of rice. And I say that it's the same rice. That's what fungibility is. It means that every unit is the same as every other unit. And it's also portable. Portable means that you can transfer it across distance. So, if I have a piece of gold, I can easily give it to someone else. And one of the most important properties of gold is that it's scarce. You can be very sure that when you hold gold, someone else can't make a lot of it. Like it's always going to be rare. It's always going to retain its value because if someone was able to make a lot of gold out of thin air, then it wouldn't be scarce anymore. It wouldn't be as valuable. And also it's verifiable. Verifiable meaning that like you can actually see that it's gold that you have. But as you can see, so I have the image there on the right. One of the problems with gold is that a lot of people try to cheat with gold and they'll try to put like other metals like tungsten inside of it and try to do that to try to debase the gold and try to cheat other people through hoping that people won't find out that it's not 100% gold. Um, but that's not the only problem with gold. Gold also lacks portability and divisibility. And especially when you think about how our globalized system that we live in. I mean, even right now, when I'm giving this presentation, there's people that are like, that are probably local to this region, or they're probably all over the United States, or maybe in a different country. We live in a very global world where we're connected through the internet and through phones and through telecommunication networks in general. So the thing is about gold is that it can't really keep up with the speed of our telecommunications networks that we developed in the late 1800s and also early 1900s. So the problem with gold is that it's not very portable, especially with the speed of communication which we communicate. So like if I wanted to send gold to someone all the way in Palestine, that would be a very, very hard thing to do, actually. Like not only do you have to go, past the Israeli government or whatever, but just like transferring the actual gold metal all the way across an ocean is a really big task. And there's also the issue of divisibility with gold. I mean, gold can be divisible, but it's not really good for everyday transactions. Like, imagine if you tried to go to a farmer's market and someone was, selling their stuff and priced in gold, and you had to divide it down to like the gram or even less than a gram of gold to try to buy everyday household items. You'd find that it's very, very unfeasible to do. So, because of the weakness in gold, especially considering its portability, divisibility, verifiability, this results in the development of fractionally reserved banking and Riba-based fiat currencies. Now, how did that occur? Well, let's go over it. There's actually quite an interesting story to this because so we understand that gold has weak properties, right? So what ended up happening was that because of how cumbersome it is to keep track of gold, it became harder to use in everyday commerce. People didn't want to hold on to it for any length of time because people can come and steal it, or maybe they weren't comfortable in keeping custody of it. So what happened is that people went to their goldsmith. So someone that has gold, he went to his goldsmith and he said, "All right, hey, I have some gold. Do you think you can keep it safe for me?" And everyone knows the goldsmith in the village. Say the goldsmith is like this really trustworthy person. So the goldsmith, he gives paper receipts for the deposited gold. So he gives, like say if I had a piece of gold, I give it to the goldsmith and the goldsmith comes back to me and he says, "All right, here's your paper receipt. It says you are entitled to this many grams of gold. You can come back whenever and get your gold back." And say like I pay him a small fee for keeping my gold safe. But what ended up happening was something a little bit strange. People ended up transacting with the paper instead. So a lot of people went to their goldsmith and they deposited their gold and they also got paper receipts. Like say someone got a paper receipt for this amount, someone got a paper receipt for this amount. So instead of actually going back to the goldsmith to get the gold back to make transactions, What people ended up doing was trading the paper as if it was the gold itself. So again, that's not really an issue as long as the goldsmith is trustworthy. It's not a big deal. Like we can transact with the paper, and as long as I can get that piece of paper and go back to the goldsmith, and the goldsmith gives me back my gold, it's not a big deal. But the goldsmith looked at all of this gold that he was accumulating. It was just lying idle in the vault. Like all of this gold was just piling up, not doing anything. And he understood that, like, yeah, sometimes people would come and redeem the gold, but they wouldn't come all at once. So the goldsmith got an idea. And this is where fractional reserve banking develops. All right. So the goldsmith understood that all the gold is sitting in his vault. So really what he could do is that he could just make notes and trade these notes on the market as if they were gold. He didn't actually have to back it up with any gold. But there's a so this is kind of the standard like history of money of how, gold went to paper money, was that the goldsmith just realized that there was all this gold lying around. It wasn't going to get redeemed all at once. So he can just issue more notes and he would never get caught. It wouldn't even be a big deal. But there's a key missing piece of this puzzle, and it's from this book called The Problem of Interest. It's one of my favorite books about money and finance. It was actually the fractional reserve banking relied on interest. Really, what ended up happening was, so I have a quote here from the book that goes over what I'm about to say. But what ended up happening was that the goldsmith just issued loans against the gold that he had, and when he issued loans, he charged interest so that whenever the loan was paid back, the loan would be extinguished. He didn't have to worry about anyone ever catching him issuing more notes than the gold that he had. So here I'm actually gonna read this quote. I apologize because this quote is super important for my point. The fractional reserve banking system relied crucially upon the use of interest in its operation. Why, might it be asked, did the banker not print receipts and send them on his own consumption if it is in fact true that he had the power to manufacture money? The answer is that the act of spending his own receipts would lose the banker ownership of those receipts. So what Tariq al-Diwani is saying here is that, if he actually created notes and he spent them, eventually he would lose ownership of those notes. And then he says it would then be certain that at some future time the receipts would return to his institution for redemption in gold which never existed in the first instance, right? So people would come, and then they might get, like, the market might be flooded with a bunch of notes, and then the people would want to redeem their notes for actual gold, but then it turns out that the goldsmith was not being truthful and that he actually was issuing more notes than the gold that he had. But now, if the goldsmith, by what Tariq says, finishing this quote, by lending the receipts instead, the banker could charge interest on the amount lent. Upon repayment, the receipts could be destroyed as easily as they had been manufactured, but the interest charge would remain as revenue. So he understood that if he didn't want to get caught, all he had to do was just issue loans based off of the paper money instead of creating the paper money, which he did, but would be more advantageous if he just loaned out those notes, and then the revenue he would get would be from the interest, and the loan would be extinguished, so all he had was just the interest. It was a very good business model because it cost him nothing. So the goldsmith ended up just creating money, but he also ended up creating money and making interest off of the money that he was creating. All right. So this is kind of like the history or the background of how, like, banking developed historically. So we're gonna now shift gears and talk a little bit about how our current fiat monetary system came about. Now, there's a history of banking that developed in, like, 1600, 1700, 1800 in Europe, and in a lot of places like that, like in Italy and Germany and England and and other European countries. But we're going to focus this discussion on something that happened in the United States. So in the United States in 1913, this is like the year when our monetary fate was sealed, and it's the creature, I call it the creature from Jekyll Island. So this is also based off of another book called The Creature from Jekyll Island by G. Edward Griffin, where he talks about how the Federal Reserve was created. So it was created, there was actually a lot of controversy around how this was created, because you had these group of 6 men. Some of them were in the banking sector. They were connected to, like, big banking families like the Rothschilds, JP Morgan, and you also had people that were in the government. You also had like a senator that was also a part of this group of 6 men, and they met on an island off the coast of Georgia. It was called Jekyll Island. Like it's a real place, and they marketed this as like, oh, like in the press they were wondering why these famous people were meeting on an island, and the press at the time were saying, oh, they're just meeting for a duck hunting trip. But really, they were actually meeting to construct what would be the Federal Reserve Act. Now, the people that were in this group of 6 people that were on this island trying to craft the Federal Reserve Act understood that this act would never get passed, because what they wanted to do, what the 6 people at Jekyll Island wanted to do, was to create a central bank where they controlled the money, where everyone else would have to use that money. But they needed to find some way to be able to pass it through Congress and through the Senate. So they came up with like a really dubious plan, a really conniving plan about um, if they could create like 2 acts, right? Like if they had like one bill and they had another bill and they made it seem like they were competing. One of them was the Federal Reserve Act, and the other one was called, here it says on the bottom of this octopus image, it says the Aldrich Plan. uh, if they could try to market the Aldrich Plan as like it was like this evil thing, and then the Federal Reserve was going to be like this, decentralized network of banks, and it was going to, because at the time in 1913, there were a few banking panics that happened. So a lot of people were kind of like looking for some kind of solution because, there were some banks at the time that were not being truthful, and there were some banking panics that happened. And of course, at the time the press was trying to trying to popularize this idea that like, hey, we need something to solve this problem. So this is where these 6 men, again, they were connected with these big banking families at the time, released the Federal Reserve Act in 1913. So President Woodrow Wilson signed, this was like 2 days before Christmas. So like a lot of people that were in Congress were like on vacation or whatever. And this got passed like a few days, like right before Christmas. And it got passed very quickly, like without a lot of people noticing. But this had huge ramifications, because basically what this act did was it set up the central bank for the United States. And this central bank would be the central bank for the entire world. So there was a lot of things that happened throughout history, most notably in 1933, Executive Order 6102. Again, 1933. So, like after the Federal Reserve Act was created, World War I happens. They use actually the Federal Reserve to create a lot of money to finance World War I. That's a topic for a different time. And then after that, you had the 1920s, where again, they were printing a lot of money during the 1920s. And because of all the money printing, the Great Depression happened at the end of the 20s. And then the Great Depression happens, and the government is obviously broke. So they need to find some way to keep themselves solvent. So what they do is they issue this Executive Order 6102, which basically makes it illegal for any citizen in the United States to own gold. You had to, by this executive order, citizens of the United States had to turn in their gold, and they got dollars for their gold. At the time, the exchange ratio between dollars and gold was $20.67 per 1 ounce. Now, after people, so people at the time, they just like, okay, well, like you're going to get arrested if you don't give up your gold, and you would get money for it. So people ended up giving up their gold to the government, and then uh, like a few months later after that, the United States reprices that gold to $35 an ounce. So automatically we can see that the United States, because they needed like more gold in reserve, what they did is they confiscated everyone's gold, and they repriced it at a higher price. So that was basically kind of like a default by definition. Like they basically confiscated people's wealth because they were insolvent. But anyway, moving on, World War II happens. Then at the end of World War II, you had the Bretton Woods Agreement. So the Bretton Woods Agreement, basically what it did was, because the United States and the Western powers have won the World War II, they decided, all right, we need a currency where the entire world needs to follow it. So what we're going to do is going to have the United States dollar be the reserve currency, and then everyone else has to peg their currency to the dollar, and the dollar is going to be pegged to gold. So just to review, you have gold sitting on the bottom, the dollar and then you had everyone else's fiat currency that would be pegged to the dollar. So it was just up to the United States to make sure that its dollars were pegged to gold. And I should also mention that this Bretton Woods agreement, as unfair as you could see it, as it is, one way to kind of enforce this Bretton Woods system is they actually created the International Monetary Fund and the World Bank, which I'm not going to get into too much in this presentation, but for people that come from that are native to other countries are familiar with these organizations, and basically what they do is that they impoverish a lot of third world countries by getting them into debt. So basically, these organizations are kind of a way to enforce this dollar hegemony in this world that we live in. Anyway, so everyone is pegged. All of these countries after World War II, they had to peg their currency to the United States dollar. The dollar was pegged to gold, and eventually, what happened is that in 1971, because of a lot of structural issues with the financial system, President Richard Nixon decided to suspend the convertibility of the dollar to gold. Because what happened was that because of the Bretton Woods system, people could still, like other countries, it was still illegal for the United States citizens to own gold. But if foreign governments wanted to redeem their gold for the dollars that they held, they can do that. They would have to come and actually send someone to pick up their gold from Fort Knox or whatever. We keep the gold here in the United States, but people kept a lot of European countries were doing that leading up to that. So President Richard Nixon said, "No, you know what? Khalas. No one is going to be allowed to convert their dollars into gold anymore." So 1971 is like, up into this whole time, the dollar and fiat currencies were pegged somewhat to gold, but up until 1971, the dollar is completely fiat. Like it's no longer tied to gold. It is a purely fiat monetary system. What I mean by fiat is the Latin word for like let it be. Like it's just like it's going to have value. People are just declaring it. So this is what happened in 1971, and this is the current money that we use. Now, everyone in the audience already knows that the dollar that we hold and that the dollars that we hold are losing value a lot. And you can see from the other historical events that we talked about, you can see it on this graph. So you can see that when the Federal Reserve was created, there was a huge drop off in value of the dollar. And then you see president, there was like a depression or whatever. Then it criminalizes Roosevelt criminalizes the possession of gold under Executive Order 6102. The dollar keeps tanking. Bretton Woods Agreement, the dollar keeps tanking. And then in 1971, the dollar is no longer pegged to gold, and you can see it just going down. So like, if you held $100 in 1913 and you held those dollars all the way like until all the way until 2020, it would only be worth like in terms of purchasing power, it would only be worth about like $2 or $3 compared to how much it was back then. And guys, like, understand, this is the premier fiat currency. This is what happens when you have the United States winning every major war, and this is how their money looks like. You can imagine in every other country, the fiat currency is worse than this. So like, you can see that the dollar's lost like 97, 98% of its purchasing power since the creation of the Federal Reserve. And then we can see that it's lost so much of its value. And this is like the best fiat monetary system. And this is how much value it's lost. So I just want people to understand that the purchasing power has decreased massively. When you go to the grocery store and you see that the prices of things have increased, it's not because of like, like corporate greed or whatever. No, it's because you have people that are printing money and devaluing the money that you already hold. So that causes the prices of things to go up. So this is like it's not, I just wanted to confirm and let everyone know, if you feel like everything costs more, it's because, yeah, the monetary system that we use inherently means that things are going to cost more because people are printing. There are a selected group of bankers that print a lot of money at the expense of everyone else. Okay, so I know I've covered a lot. We got the history done, but now we're going to talk a little bit about how the current financial system operates. We need to do this step first before we can even dive into Bitcoin. We haven't even talked about Bitcoin yet, but I promise we will get there. Okay, so the current fiat system mostly operates on what's called fractional reserve banking. I've used this word before, but I'm going to talk about what it is. All right. So fractional reserve banking means that the bank only needs to keep a fraction of the money it only needs to hold
هذا
a
كونفرنس
small,
اونلاين الان لايف.
yeah.
يبغوني ادخل
Sorry, so
speaker.
someone isn't on mute. Thank you. All right. So the fractional reserve banking system operates in such a way that banks only need to keep a small fraction in reserve. And we're going to go over an example of what this means and how this leads to creation of more money. So what banks have need is called a reserve requirement, which lets them know how much reserves that they need to hold on to. And this whole process of fractional reserve banking crucially relies upon interest. So I'm going to give an example. Say you have $100, all right, and you deposit this $100 into the bank account. A lot of people think that like the bank keeps your $100, but that's actually not what happens. What happens is that the bank only keeps a small fraction of it. In this example, we're using a 10% reserve. So I have here in this, if you're keeping up with this graphic, they keep only 10%. So 10% of $100 is just $10. They only keep $10. What do they do with the other 90? Well, they loan it out. They loan out the other 90. And again, that gets loaned out and then someone deposits that $90 into another bank or into the same bank. And what happens? Again, they only need to keep what? 10%. So 10% of 90 is what? $9. And then you're left with $81. That gets loaned out. And then that $81 again finds its way into the bank. And then you can see, like, if you keep iterating on this process, the $100 that you put into the banking system creates 10 times as much money under a 10% reserve requirement. And I want we're all Muslims here in this audience. I want people to understand that every step in this money creation process requires interest because they're loaning out money. They're loaning out a lot of money. They're increasing the money supply, but they're doing it through the mechanism of interest-bearing loans. So I used a 10% requirement in this example, but actually, since 2020, since COVID, what happened is that the Federal Reserve decreased the reserve requirement down to what number? 0. The Federal Reserve, since 2020, has now made the reserve requirement 0. That means banks don't need to hold on to any of your money. What I mean by this is that anytime any one of us, you're holding on to money and you put it into a checking account, the bank does not need to hold on to any of it. What this means is that the money in your bank account isn't actually there. Never mind that it's not yours. The money in the bank account is not even there. Like they only have to, they're not keeping 0% because anyone can go to the bank right now and withdraw cash, but they keep a very, very small, tiny percent of reserves in there and they loan out the rest. The only difference between a checking account and a savings account is that a checking account, the bank doesn't give you a cut of the interest. In a savings account, they give you a little cut of the interest that they're doing. But understand that every time you deposit money into the banking system, all you're doing is telling the bank, here, take my money and make riba off of it. That's what you're doing. Every time you deposit, every time any of us deposits money into the bank, that's all you're doing. You're just telling the bank, make money off of this and make interest off of this deposited money. And they don't have to keep any of the money. So this is how, like, this accounts for like most of the money that's in the current financial system. But of course, there's other ways that money gets created through the Federal Reserve level. So this is like I call it the Riba protocol in the current financial system, right? So I have this pyramid here, and it's from this book called Layered Money. So basically, the reason why I put this pyramid here is because money kind of works in layers. So, what I talked about was just basically this level, which is the deposits. But you also have other parts of the financial system, like the money market funds. You have the Treasury repo. You have like the banks that deal with the Federal Reserve, and then you also have at the very top U.S. Treasuries. So actually, if you look at a dollar bill, I wish I had a dollar bill right now, but I don't. But if you were to look at a dollar bill and you look on the dollar and it says Federal Reserve Notes on the very top, like of a dollar bill, just look at it on the top, it says Federal Reserve Notes. What's backing that note? A lot of people will say, oh, there's nothing backing it now. Like you think that's what you get out of this presentation, but it's not. What's backing the dollar is riba-based loans. That's what I want you to understand. How is it backed by riba-based loans? Because the way that money gets created is based off of how much U.S. Treasuries they are. U.S. Treasuries are kind of like the apex money. This is what other foreign countries hold on to. Like, this is what banks hold on to, especially banks that deal with the Federal Reserve. This is what corporations hold on to, called U.S. Treasuries. Basically, what anytime someone buys a bond, a U.S. Treasury bond, they're buying U.S. Treasuries. So what are U.S. Treasuries? They're just interest-bearing loans. That's it. They're interest-bearing loans. That's all it is. So whenever you buy a U.S. Treasury bond, you're just basically you're buying it so that you can get the interest payment off of it. And this is considered the apex type of money, or the top form of money, and all it is just riba-based loans. And this is what backs the entire financial system. Understand that what backs the entire financial system is just interest-based loans. Like, that is what every country, almost every country in the whole world that operates within this fiat financial system framework holds onto U.S. Treasuries. Even Muslim countries hold on to U.S. Treasuries. I don't want to like single out any single Muslim country, because like they all do this. All Muslim countries today, almost all of them, hold on to U.S. Treasuries. They're just interest-bearing loans. You have to hold on to U.S. Treasuries if you want to be plugged in to the global financial system that's currently owned and operated by the Federal Reserve. So I have this quote from this other book called Broken Money by Lynn Alden. The way she explains the current financial system is beautiful. Everything is a claim of a claim of a claim, reliant on perpetual motion and continual growth to not collapse, right? It's just turtles all the way down. And instead of turtles, it's riba. It's riba all the way down. Like, if there's one thing that you can get out of this presentation, it's that our entire financial system, the very money that we use, the money that everyone here in the audience that's using, including myself, it's all based on riba. That's what backs it. All right. So, and like, I don't need to go over about how like riba is haram. Like, I assume all of the Muslims in this audience understand that like riba is completely and unequivocally haram. Allah wages war on the one that engages in riba. Prophet Muhammad sallallahu alaihi wasallam curses the one that that engages in riba, and also the one that takes riba, and also the one that witnesses it. I mean, we're all holding this money that is based on riba. Like, I can't help but wonder that like we are all like witness to this. Like, we are all being cursed. So if you look at the consequences of this, it becomes very clear like why there's this strict prohibition against usury, not just in Islam, but like also in Christianity and other faiths as well. So like, this creates a moral hazard. What do I mean by that? Banks are incentivized to be reckless and issue as many loans as possible, to make as much money as possible. So like, when you keep making more and more money, you're just causing all of this instability in this financial system, and you're incentivizing this moral hazard where other banks and other institutions are incentivized to issue as many loans as possible. This causes capital destruction, because all you're doing is basically flooding the entire system with money. It causes entrepreneurs to think, oh, okay, we have all of this money now, let's pursue all of these projects, but then these projects never end up coming to fruition, or they end up being these projects that that lead to these big startup companies that that end up getting valued at a ridiculous amount, where it basically amounts to nothing. It's just a part of capital destruction that's caused by the riba-based fiat currency. We also have interest rate arbitrage. I can give a very perfect example of this. Why is it that like when you go to Macy's, or if you shop on Amazon, or like, if even Apple, all of these companies, they offer certain products, but they all offer credit cards. Why is Apple, did you guys know that Apple has a savings account where you can earn interest? Why is Apple, a tech company, offering a savings account? Why does Macy's, a clothing company, give you a credit card? They're doing this because they can borrow at a lesser amount of interest, and they pass on the higher amount of interest to their customers, and then they make the difference. It's such an easy way to make money. And you also, this results in the lower quality of goods and services, because you're not incentivized to make higher quality goods. You're just incentivized to just keep making money from riba. This creates a huge artificial market demand, where like you have the prices of things increasing. The prices of things increases for the dumbest things. We all know this. We also see that you know, people's labor aren't worth as much. I mean, they're I shouldn't say they aren't worth as much, but the price of people's labor decreases, because basically what happens is that the labor is being harvested by these big banks and big corporations that can leverage this fiat financial system that's completely based on riba, and they can make money through riba while you're trying to make money through actual hard work. And lastly, last but not least, is the big cost for this riba financial system is the human sacrifice through war. Ron Paul, Representative Ron Paul, famously said, "It's no wonder that the age of total war coincided with the age, or sorry, the century of total war. It's no coincidence that the century of total war coincided with the century of central banking. Since the creation of the Federal Reserve, the United States has been in war for almost every single year. I think there's only been 2 years where the United States hasn't been at war. That's no coincidence. It's not because, like, you know, the American people are inherently evil, right? Like, it's because of this riba-based financial system incentivizes people to constantly go into war and make money off of anything. Making money off of killing people is really profitable under the current fiat financial system. And that's exactly what the US does. The US goes into huge amounts of debt just to set up all of these military bases all across the world, completely go to war, especially with Muslim countries, and it's all funded by the riba-based financial system, where every person has to pay the cost of it through the use of the fiat currency. Okay, so alhamdulillah, like we got pretty far, and I apologize for going above time, but I everyone understands how bad this current system is. And I want to say that I'm not the first one that has understood or saw the problems of the current fiat financial system. There have actually been other Muslims, even before I was born, that looked at this problem, and they've tried to solve this problem. So Muslims looked at this current fiat financial system, especially since the 70s and 80s and 90s, and they said, "Wow, like this current fiat financial system is completely based on riba, and it's causing all of this destruction. We need to go back to the gold standard." That's what they tried to do. So there's been 3 instances that I know of that Muslims have tried to go back to a gold standard. So you have the Murabitun, which is so I have this image
Abdullah,
here. Yes, sir.
I just wondering, it's almost 8:30 right now, so we're going about for an hour, and you still have about another 10 slides or so to go. And I was wondering if we should maybe consider doing like a part 2 and open the floor for some questions. I know it's going to take another probably 45 minutes at least to go through all the rest of the slides.
Yeah, yeah.
So what's your
Inshallah,
thoughts?
if you want to do a part 2, we can do that. I apologize for going above time. Like I said, this takes a lot of explaining to do. So
It's really very
yeah.
great information. We have a lot of information here. It looks very helpful. And now we at least understand what's going on. We can put it all together. And I'm wondering if we just open the floor to the questions, inshallah. If anybody has questions, we can, inshallah, plan
Okay.
another event, inshallah, next week. And we'll pick up from where we left off, talking more about the Bitcoins and how they impact the market, inshallah. So we'll go ahead and pause at this, inshallah. And I'm going to open the floor for the next few minutes, inshallah, for any brothers and sisters who have questions. They can, again, send it via chat. They can ask a question directly to Brother Abdullah, however you feel like it, inshallah.
Is it possible to use like Bitcoin or cryptocurrency as like a new banking system? Like if like there was like a group of Muslim brothers that got together and wanted to create like some type of system to where you could use Bitcoin through everyday transactions. Is that
Yeah,
like
I mean that's you know, as you can see, that's kind of like where I'm going with this. So like like I said, I haven't gotten to the Bitcoin part. Uh, what you suggest is a very good idea, but I think it helps first of all to look at like what's already been tried. Because like, you know, I think a lot of us, you know, like we might look at a certain problem and we immediately think like, oh, okay, like we all need to go in on Bitcoin, which obviously like that's what I'm advocating for. But I think it helps to understand like why. For example, the next slide I was going to go over was like Muslims have tried to go back to the gold standard and they've all failed. I think it's good to go back and understand why they failed. And you know what, one of the things you know, trying to get like a group of brothers to try to come up with something different. I mean, understand that you're going up against like the amount of debt that's in the entire world right now is like $300 trillion. 300 trillion something dollars, man. Like this is a huge like thing that you're like even like Sultan Mehmed II taking down the walls of Constantinople in 1453. Like this is bigger than that. Like in my opinion, like you're taking down the entire global financial system. That's what you're up against. I do think that Bitcoin will solve this. I don't think that creating our own cryptocurrency is going to solve this, but I do agree that we Muslims need to come together and find out a way how we can get past this. And you know, alhamdulillah, I've been having conversations with certain Muslim leaders about this subject, and alhamdulillah, there seems to be a lot of interest in it. I actually talked to Sami Hamdi a few weeks ago. I found someone that had a contact with him, and I talked with him for a few minutes. And alhamdulillah, it seems like a lot of Muslim leaders are open to this idea. So inshallah, in the next part of the presentation, I'm going to go over that, and we're going to explore some ideas about how we can kind of fight back against the system, inshallah.
Inshallah. Jazakallah khairan.
Yeah. Just وإياكم.
Dakhlallah khair, Abdullah, for this information, mashallah. Inshallah, if anybody else have questions, inshallah, or you'd like to make a statement, inshallah, please feel free. I've also shared the email address where I'm going to be able to distribute and send the, inshallah, the recording of this presentation and the following one that we'll do, inshallah, next week as well. So again, the floor is open, inshallah, for anybody who have questions, inshallah. Please feel free.
Question.
Mhm.
In the event that a new system is created through Bitcoin or something similar, some similar medium, is there any chance of violent fallout from that effort?
Sorry, I didn't hear the last part of your question. I think you said a violent fallout from
Yes.
from a yeah. So
Yeah.
I think you're being very realistic about this, because I agree with you. I think trying to come up with an alternative to this, it's gonna be a violent process. But I think there are ways that we can actually do this in a very peaceful way. I think that, you know, like as I talk about, like with you know, in the next slide, I'm kind of spoiling the next presentation, but a lot of these attempts to try to bring back the gold standard actually ended in a lot of violence. So I think there is definitely a violent component to it, but I think there's also a way, if we are strategic enough and if we are very like long-term and thoughtful about how we're going to design the next monetary system for the next 500 years, then I think there's a way we could do this in a peaceful way, especially if it's from the lens of using Bitcoin, where like it's what I go over it being a protocol, right? Like that's what I call this presentation, is the anti-Riba monetary protocol, because you can just use a protocol and no one can stop you from using it. Like no one can stop you from using the rules of chess. No one can stop you from using the rules of soccer. No one can stop you from using the SMTP or the rules of how to send an email. So like in this kind of framework, we can go ahead and use Bitcoin in a very permissionless way, where we don't have to ask permission from any government. We can just go ahead and start using it. So yeah, inshallah, my hope is that this transition will not be violent.
Jazakallah khair. Any more questions, inshallah? Comments, remarks, concerns? Okay, if you did not receive an email from the email I just shared with you and you'd like to attend the next session, inshallah, please share your information or send your contact information via this email, arabicschoolwashington@gmail.com, and I'll make sure that, inshallah, we'll copy you on the next update or the next event that we're going to do, inshallah, within the next week or two, inshallah.
Inshallah. Yeah, and if you know, if you don't have any questions now, you're more than welcome to email me, or if you have something in the WhatsApp chat, you're more than welcome to ask, and I can try to help answer your question, inshallah.
Okay, so now with that, inshallah, we'll conclude this event, inshallah, for tonight, inshallah, and we'll reconvene, inshallah, very soon, inshallah, probably next week or so. We'll
Inshallah.
send the information to everybody. Jazakumullah khair. سبحانك اللهم
إياكم.
وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك. السلام عليكم ورحمة الله وبركاته.
وعليكم
عليكم
السلام.
السلام ورحمة الله.